Good day, traders. I trust you are all well. What a few days we've had in the market. Just keeping my eye out on YouTube, just in case someone has a comment or a question or whatever. But what an awesome couple of days. Now, if you are a price action trader, you're probably having a feast. What I want to do in today's 15 minutes is just talk about the Hang Seng 50 and what's taken place in the morning. Specifically, just a trade I have come out of. So I don't know if we'll have enough time to go through some of the earlier trades in the other markets. But if you're joining me, top of the hour at Wednesdays at the market with George, middle of the day trading, we'll go through everything in greater detail. Now, I'm going to go to the charts and show you the few things on the charts. But the trade I'm going to talk about is this trade. So I took it here. You can see where I sold, and then I've exited the trade. But when I took the screenshot, I'd just been trailing my stop down all the way down, and that's where my stop loss was when I took the screenshot. So I want to talk about the particular structure that's taking place, but also I want to show you something on the daily chart of the Hang Seng 50, because there's some interesting things taking place, which you can also apply to other markets. So let's see if I am technologically savvy enough to quickly share onto MetaTrader. Okay, folks, if you have any questions, just pop them in and we'll answer this column. All right, fantastic. So it looks very interesting, right? A lot of price action stuff, price action details on the charts, but it all tells a nice story. So this is what took place in the morning. I'm not sure if some of the guys who were in Wednesdays at the market are tuned in now, but they remember us talking about this structure, which I'll discuss in greater detail when we get to the Wednesdays at the market show shortly. Why would I have taken this trade here? Before we talk about that trade, let's have a look on the daily time frame, because there are some interesting things which we just need to bear in mind. So if we go up just one level, okay, to the highest time frame, the monthly chart, as far as price action is concerned, gives you the absolute macro view of price action. So very quickly, I mean, the bears from this high, which was high of 2021, they sold off. And as far as they are concerned, I mean, if you just look all the way down here, very few strong bull candles, couple of bear candles, dodges, which are pullback profit taking, tails at the bottom, good for the bulls, but market sold off from that high right up to the low of October 2022. Then we had a huge bull candle, followed through, etc. And the market turned. Why would we have turned? Well, as far as the bears are concerned, it is just a pullback in a strong breakout. So they would have been thinking, one of the things that we always put in when we see a trend and a pullback, bears would have been saying, well, leg one, pullback, and leg two. So if I just toggle that, so you can see where that low is. So as far as the bears are concerned, their goal is to get down here. And that's simply because, they're seeing the first leg pullback, second leg. So from a monthly time frame, the market is bearish. And, when I say it's bearish, we're always talking of probabilities, of course. So the higher probabilities are favoring the bears. And a decent enough reversal. I mean, if you see this on any chart, you just have to jump in and sell. So the month of February was good enough signal, and that sell signal has been triggered on the monthly. And the bears want to get down here, all-time low, and smash through it and get down there. I mean, the news guys would absolutely love that, and they would tell us all sorts of things about markets crashing, etc. On the daily time frame, bearing in mind that same leg 1 equals leg 2 structure. The patterns that I show you repeat themselves. And that's one of the things that we've got to grasp as price action traders. The patterns, the markets are fractal, Fractal. So patterns do repeat themselves. Why do I say that? Well, if you just look at the chart, you're going to say, well, what is happening? Well, here's what's happening. If you were to ask anyone, if I tell my daughter, listen, and she knows this, the red candles are the bears, they're selling, the green candles are the bulls, and they're buying. Who is in control? She's going to say, well, it looks like the bears are in control. The market has been selling off. True. As far as the bears are concerned, they would have been saying, okay, first leg, pull back, and the goal was here. Okay, so they managed to get to their goal. Wrong one, George, using that. They managed to get to their goal there. Just talking about that first leg. But then we had another, this was from January, but then in February, after a bit of a pullback, we had a strong spike and channel. Spike and channel is one of the patterns that we look out for. So as far as the bears are concerned, they're saying, hang on, our move actually started here. All of this is potentially a first leg, and then we'll have a pullback. Now, if you think in that manner as a bear, what you then do is this tool that we use, and price action traders are getting quite familiar with it, and there is a pullback. So the goal, if this was your first leg, and there is a pullback, you go to where in the first pullback, you try to break out above it. That's where the bears want to go. What confirms that is if you look at the most recent bear breakout, huge bear breakout, the pullback ended here. So again, the bears are saying, oh, we sold off, and there is the end of our pullback. And our goal is to get to this big round number here, which is 18,000. So when we were talking earlier on in the morning show, trading the Hang Seng Open with the guys who were in for Wednesday with the market, I was saying, listen, this is a potential double top at this level. And if we get a structure, we've got to find ways to sell it because the bears are thinking leg 1, pullback leg 2. So keep all of that in mind. And going into the day, so as I said, I'm going to talk about this in a different format. I want to talk about this trade that I took here, which I showed you on my PowerPoint chart there, that I was trailing the stop until I decided to get out. And the reason I got out before I forget is this rule that I have around news. We've got a news coming up in 2 hours' time, just short of 2 hours' time. And there is 5 red announcements on the US, and then there's a GBP one. And for every one red flag, I say to myself, 30 minutes before, you need to be out of the market because the forces are going to come in to try to influence the direction of the market. So when I saw 5, I got to be out like 2.5 hours before. Man, what do you do? Well, rules are rules. That is my rule. That's what I do. So I kind of pushed it as far as I could. And then when I got to the time where I've got to make a decision, do I stay in or get out? I decided to get out, and I got out. And guess what? After I got out, the market sold off a little bit more, So I possibly could have gone to a few more movies after this, but I'm happy with the movies I can afford from this earlier on. I cannot see the chart. Oh, Silas, I hope you can see the chart now. Sorry about that. I hope everyone can see the chart. I didn't check earlier on. But looks like I'm screen sharing. So if you still can't see it, give me a shout. Okay, beautiful. Thanks, Ken. All right, so this pattern, guys, when you hear me talk, whenever you hear me talk, I'm always saying we need to see the pattern. And the reason I'm focusing on this, because it's classic in the way that it's set up. We need to see the pattern, then we need to see the signal. So the pattern was this wedge pullback. Okay, so wedge pullback. After this bear sell-off, there is a wedge pullback. And after you see the pattern, then you have to look for the signal. okay? And there came the signal. And I'm always kind of saying, oh, I'm waiting for the signal. I don't want it to be an outside candle. If it's an outside candle, low probability trade, then I must decide, I don't want to take a low probability trade, and that I just sat there and it did not become an outside candle. So forget about what happened afterwards. In terms of the way we trade, lower high, double top, after a wedge top, you've got to be taking the trade. Now, a few other things that I had in place, waiting to see if the structure set up. So I had this, that pullback, that high, that low, and I said, well, if the bulls break out above it, they want to get to a measured move. And the measured move fit in perfectly with what I would have been looking for, a test of the low of yesterday. So this green line here, sorry, not low, is the high of yesterday. I always mark the highs and the lows of the previous day. So that says to me within that zone, it's a sell zone. And of course, you see the bears selling off here. Then when I saw that, micro double top, 2-bar reversal, low high double top, I'm not going to take that trade because that doesn't fit into what I'm looking for. It's part of the setup that I'm looking at. So I want to see how strong the bears are. So a couple of bear candles, good. Follow through, low high, good. So now we have another attempt. At that stage, I drew the line like that. Okay, connecting these highs, and I'm thinking, well, we might get a wedge up to here. Then when we had the bulls trying to break out above this magenta line is the high of at the open of the day. You can see it here. There's the open of the day. Then you got to be thinking, okay, if the bulls are strong from this low breaking out above the open of the day, the measured move is up here, and that's perfectly fine because that's still within the range or the zone that I'm expecting the bears to be selling. And then you got to wait. That's why, we wait because you've got a structure in mind that you want to trade. So you got to wait for it to set up. Doesn't matter how long it takes, get some coffee, do whatever and wait. So I'm waiting to see if we get a wedge top. Now, a wedge top, remember, is 3 attempts by the bulls to do something. First attempt to break the trend, failed. Second attempt, failed. There's the third attempt. Here, we could have had a perfect double top and a 2-bar reversal. If that had set up, that is perfectly fine to count as a wedge top. Then you'd have said, I got my wedge top. Now let me wait after the wedge top for the actual signal to trade. But we were rewarded with another third attempt. Then as it sold off, I said, well, there is my wedge top. Overshoot here, fantastic, which just shows that the bears are strong. Then you got to wait. Everything is set up nicely. I just need the weight get in the market. Got it, took the trade, and I left this in here because that's where I put my stop. So remember, we use measured moves that high. There's my entry. And there's the low, high, low, measured move. So the stop was above here, technical point. Now, something else had to happen because I'm now going 30 minutes. I'm taking just 30 minutes before the market closes. So what I always say to the guys is if you're taking a trade, a setup before the market closes, you have to make a decision and say, am I going to stay in the market or am I going to get out? Because you don't know. The market might gap up or gap down. Okay, so my decision criteria is to look to the left. And after I look to the left and all this stuff I showed you on the daily chart and what I showed you on the monthly chart, I was comfortable with the risk that if I get stopped out, happiness, I have no problem. So market pulled back and at the open was rewarded with a gap down. Then I just trailed the stop down. So I think I wanted to focus on this in this 15-minute show and really just to say, guys, this is proof of waiting for the pattern to set up and then the signal, but having started with your view right up from the monthly time frame. So for the guys joining me Wednesdays at the market middle of the day, I will see you within 15 minutes time. For everyone else, please be wary of the news that's coming up. You've seen how the markets are responding to what's taking place in the US presently. So make some crystal clear decisions about staying in or staying out. There's many other trades that set up, but time is run out. Thank you very much. Look forward to seeing you again next Wednesday. And let me just check if there's any questions. Glad you get into grass with Kathy. Really appreciate you turning up every single week. And no questions. Thank you, guys. We shall see you again. Take care. Marlon, thank you, boss. Bye.